And I remind you to click that subscribe button right below this video to subscribe to our YouTube channel. Lots of great information every week on our channel, so you don't want to miss it. So click that subscribe button now. So we have our panel presentation now, and the topic is what's the best way to make short-term profits? And we have Hugh Grossman, Mark Skousen, Jon Johnson, Tim Skousen, Jim Woods, and Ahren Stevens with us today. So a lot of our Eagle traders here, and I've got the lovely job of trying to herd cats today with lots of people on this on here, but I think we'll have lots of fun and lots of great information. So I'm going to start off with a question. And the first question is, what is the biggest threat that you see in the market right now? There's a lot of headwinds right now, and I'll start with Mark, but what do you see as the biggest threat?
Well, since I am the veteran here, no doubt, probably the oldest person here. And as you know, tomorrow I celebrate my crash birthday. October 19th was the stock market crash of 1987, the worst stock market crash in our history. I celebrated my 40th birthday on that date. And I basically argued ever since that we will not have crashes. We'll have bear markets, and we can certainly have another bear market coming because of Fed policy. The greatest fear I have is Fed policy going overboard. We've seen this over and over again, where they go overboard on both sides. They're easy money for too long. They kept interest rates down over 10 years at zero or close to zero. They expanded the money supply dramatically in 2020, far more than they needed to. They panicked. And I think they're panicking right now. They don't want to go down in history as the Federal Reserve that brought back inflation. So Jay Powell is working overtime to raise interest rates aggressively. Mortgage rates are approaching 8%. He's definitely determined to slow down the economy, make things worse so that inflation ends. And he could be successful in ending or bringing inflation back down to 2%. I think he's going to panic again at some point when the stock market has a serious bear market in 2024, which would be good for Republicans. Get rid of Sleepy Joe, but we could be worse off with Donald Trump. I mean, who knows? But from the market point of view, I think the biggest threat is the Fed raising rates too aggressively, tight money continuing, and having its ill effect. So that's my answer to your greatest threat.
All right. Who else? Jim, what do you think the biggest threat is?
Yeah, so I concur with that. I mean, the biggest threat is rising yields, because rising yields are finally provide some competition to equities. So far it's been, there's been the only place to go for any kind of returns has been equities, and now that's not the case at all. So we're seeing money go where it's treated best, like it always does. And we're seeing money flow out of yieldless things like gold and high beta tech stocks sometimes suffer from high yields as well. So if yields continue to stay around the 5% area on the 10-year, that's going to be a pretty consistent and continuous headwind on stocks. And that's my biggest fear for the markets. But at the same time, we think, at least I think, we're going to see the Fed pretty much say no more hikes, or at least maybe one more hike. And if they do that and they kind of signal that this is basically it, then that'll have the opposite effect. That'll be one of the catalysts. And I know we're going to get into that in a few minutes, but so my biggest fear remains, like Mark said, the yield on the 10-year and higher for longer interest rates, which will stranglehold the economy. And it hasn't so far, but it will have that effect. There's no getting away from it.
All right. Anybody have a different threats or want to expand on that?
Well, I will say that the mortgage 30-year fixed did hit 8% today, and hadn't done that since 2000. So to be redundant, yeah, yields are a problem. I mean, that's going to be the problem. I have no confidence in the Fed, never have. They'll always manage to shoot themselves in the foot, or they'll shoot us in the foot. Fed doesn't really care about that. But I think big picture, the thing that could derail what I think is going to happen could be just the continued rate problems. And, geopolitical issues are out there. Every weekend we worry about what's going to happen this weekend now. But that feeds into the rates as well. So, not to be just beating this horse to death, the rates are a problem. And, I will note that just recently, just this past weeks, gold has been rising with yields, and it hadn't done that in a while. And I think that's typically tied, and Mark can correct me, as I know he will, but I see that typically tied with an inflation worry. And I'm very concerned about inflation taking off again, as it did in the 70s when we had that double rally in inflation. And the second one was really bad. But that's one of my major concerns, just inflation taking off and the Fed kind of being caught flat-footed. We have more inflation when things are stagnant than we do when things are moving well.
All right,
I can chime in here. I'm thinking here, I kind of want to expand on what John said here. I was thinking the uncertainty in the market with these geopolitical situations right now. When Trump was president, I don't recall any wars. Seems to me, I think maybe Syria, if I remember, piped up a little bit. And then Trump sent over, what did he call it? The mother of all bombs. I think one bomb, and that was it. There's no problem. And the market's escalated up. We've had the greatest growth in the longest time during his reign. And now I think we are viewed as somewhat of a weak administration. And so these other powers are trying, piping up. We got Russia into Ukraine, and now the whole situation in Israel. This could turn real bad, real ugly, real fast, especially as we go over there now and help Israel. And I think if we get a stranglehold on the whole oil and energy sector, that of course is going to be inflationary. I'd have to think the Feds are trying to do the best they can with tamping down that whole inflation. I don't know what else they can do other than than that, but I'm thinking of that whole uncertainty. And I think somebody mentioned about every weekend there's something, seems to be something else is piping up here, but I think that's what it is, the uncertainty of the market. I think the markets can handle good news, of course, and bad news, but it's that uncertainty that they're having trouble with. So that's kind of what even now with earnings season, the threat is that if there's a lot of good earnings, the implication is that, well, if the earnings are good, that means the economy is booming, and therefore it's inflationary. So we better push down the stock market because of the threat of interest rates. So go figure. Wait, we can't win for losing. So.